Hey, this is Dylan Frye, the real estate guy, here to be your guy for any real estate needs in the Kansas City area. I'm here to help people when they're moving to the Kansas City area, looking at moving to the Northland, trying to find some different people that can help you throughout that transition to this area as well. Today, we are doing one of our Everyone Needs a Guy podcast, and we are talking with Andrew Keene from Blackstone Wealth Protectors. He is going to talk to us about finances, tax planning, how to get your businesses set up. We are going to go through a myriad of things. We're also going to discuss his book a little bit that I encourage you to go out, find, get the ebook, look it up. It's going to help save you tons of money in tax planning and different strategies. But we're going to get into that. But before we do, if this is your first time on the channel, make sure you hit that follow button and then hit that little bell so you'll get notifications of our future interviews with different people around the Kansas City area that can help you, as well as different neighborhoods in the area and other weekly tips to help you progress through any kind of real estate transaction. So, Andrew, today I would like you to introduce yourself. Tell us a little bit about how you got started in the financial planning industry.
So I've got an economics degree and political science degree. I've owned a construction company, got into real estate when I was 19, ended up owning a home and auto insurance agency, and I've been wanting to get in the financial industry for a while, so I got into it in about 2019. I already had my financial license, so I did a shadow program with a big firm, and I just quickly realized I'm not a big fan of what the financial industry does. One of the things that they don't focus on at all is taxes. Taxes are one of our biggest expenses, but yet we don't plan for taxes.
Yeah, and a lot of people don't. They don't plan around it. They just see that bill come due every year, and they're like, hey, I got to pay this.
Yep. And so I ended up going and working for a tax firm for a year, and I learned that the tax industry doesn't do a whole lot of tax planning. So I decided to go out, get my EA, and go out on my own and start doing tax planning. And so when I'm working with clients, we're looking at retirement planning, we're looking at taxes, we're looking at cash flow, we're looking at a lot of different things that traditional financial planners aren't looking at. Like the cash flow, you can have a big pile of money, but you don't know how much cash flow that's going to get you because of market fees, taxes, or advisor fees, taxes, market losses. So we're looking more at cash flow.
And trying to actually help people manage their money.
Correct.
And make money.
Mm-hmm. And then so with business owners, what we're doing is we go through, we do an analysis of where they're at currently, both on the financial side and the tax side. And then we show them, hey, here's where we're at. Here's some ways we can help you reduce some taxes. Do you want to move forward with this?
Okay, and then so somebody says, hey, yeah, I do want to move forward with that, or like what does that look like if they're coming into you?
So we're going to basically do a questionnaire. We're going to talk to them about their estate planning, their current tax situation, their future tax situation. Do they want to grow their business? Do they want to get into more businesses? And then from there, we're going to give them tax strategies based off of what they want. And most of my clients are in the real estate world, real estate investors.
Correct. It's what real estate's one of the biggest avenues to make money very quickly. You can also lose money, but it's one of those situations where there is so much money in real estate, and it's the number one creator of millionaires. There's just so many assets that you can move around and do things. And I think that's why it's huge to have a great financial planner or somebody that is helping you, because taxes are the biggest expense, I think, for anybody that's investing in real estate.
Mm-hmm. And part of our process is also protecting your assets. So we see a lot of problems when people have partnerships. There's no protection there. Let's just say one of the partners gets disabled, and a disability could be cancer or even a car wreck, or maybe they pass away, or maybe they want to retire. How does that business or how do those assets get transferred to the family in an efficient manner instead of paying a lot of taxes? Or maybe let's just say, like happened to one of my buddies, he got a divorce. Well, the judge ended up giving his ex-wife part of the business.
Oh
So
my
she
gosh.
went in there and cleaned house.
Oh, and that's an unforeseen situation where life-changing events can happen at any moment in time. And if you don't have a good plan around them and making sure that, hey, this is our next step if this happens, people always get, I used to sell life insurance for quite a bit, and people would always say, hey, I don't want to talk about it. Well, you got to talk about it at some point. And we got to have these tough conversations. You don't have to have them with anybody else, but you got to have them with me because I want to make sure that when that tough situation does happen, your family can move forward, or you can move forward, or whoever your business partner. That's a huge thing that I don't think enough business partners talk about is how are you going to move forward if something sudden changes? Because they all see like, this is my best friend. We're going into business. We're going to be great together. And it's just like renting to family.
It doesn't work.
It's tough. It is tough because yes, they may be your best friend, but they may have a different mindset around money than you do.
Correct. And quite frankly, what's more important is going to be their family. So part of all that asset protection is also making sure you got a good team of attorneys. So we've got a good team of estate attorneys, succession attorneys, so that's business succession and exit attorneys, other financial advisors, because I don't do much on the managed money side of things. So I've got other advisors that I work with on that side of things.
I got you. So talk to me a little bit about that. You do also exit strategies. I know that was one thing that you wanted to hit on today is people having a plan. And I think if you're starting a business, you should always have the end in mind. Because if you don't have the end in mind, where the heck are you going?
Correct. And it's just not something we think about. It's not something that anybody ever really talks to us about. But kind of the common ways you leave your business is a disability, a death, retirement, divorce, or a bankruptcy from a business partner. So we've seen that happen, and they basically put the business up as collateral, and now the business is now partnered with the bank.
Yeah, and that's a nightmare.
Yes.
And now and that's why I think that you have to cover all of your bases, because if you don't, it could snowball and become a bigger issue down the line. So what are some big strategies that you would say if somebody's going into a partnership? What are the main things that they need to be focused on?
I'd probably say the number one is making sure your business entity is structured correctly. And so you'll see like maybe people will be multi-member LLC, or maybe there'll be a partnership structure, whereas the way we typically like to look at it is maybe you've got a management company, or maybe a corporation is a top business, so to speak, and maybe they own the LLC or S Corp, or however that works out. That way the taxes flow better. There's more tax opportunities. There's more protection.
Correct. You're making sure that everything is structured correctly so that it does flow perfectly as it comes to taxes, because that's one of the things that gets hairy is when people are like, hey, I know one thing that I used to see all the time when I was doing insurance for people is they'd get an LLC and then they'd put everything in their personal name and basically void everything that was there.
Correct. And then another part on the LLC is how are you signing your paperwork? Are you a member, employee, president? And if you're not signing your paperwork correctly, you can lose all your protection. And then the other part of that is your tax structure matching your legal structure?
Yeah. These are scary things to think about, because if you are doing something that you just think is correct, and then some worst case scenario happens, and now you actually you need that protection, and lawyers are good. They find loopholes all the time, and if they find a spot where you voided that, now they can come after everything else.
And so will the IRS. So if you don't have it structured correctly, they may say, hey, your taxes are saying you're operating as this entity, but your legal structure say you're operating as this entity. Well, the IRS gets to decide how they're going to tax you.
Yeah. And the bad thing is, even all they got to do is reach in and take it.
Yep.
And so what ways does somebody working with you, what are the biggest advantages of them working with you, understanding and the knowledge of people? Because it's not just you. You said you got other people you're working with, and there's a wealth of knowledge. You've got different lawyers, you've got different people that you're working with, so that when somebody comes to you and they're working with you, they have all that protection, they have all that knowledge, and it's not just one person. Because I see that a lot, is people have one tax guy that has been in the business since the 70s and is still doing things the way that the 80s and 90s, and they've always used him, and they don't realize that 7 other things that he taught them don't work anymore.
Yep. So I've got a really broad base of knowledge, and what I've done with that is I go out and vet who I work with, because what I want to make sure is we're putting together a good financial plan, a good tax plan, make sure you're efficient, there's no holes in your plan. So I've got other advisors. Like, I know what I'm good at.
Correct.
I know what I kind of know, and I know what I don't know. So that's why I've gone out to partner with other professionals.
And I think that's a valuable piece, is knowing what you don't know. And I was just with an investor earlier, and I do a lot of flips myself as well. And I'm like, hey, the thing I don't know is sheetrock. Like, I just don't like to do it. And it's one of those things where, like, I know I'm never going to make it perfect in it, but I can do all the rest of the stuff. And just talking to him about different stuff. And if you know what you can't do and you have good resources for that, it's huge.
Yeah.
It's huge. That's why that's what I'm trying to do with these podcasts, and getting people in front of people that can help them in the avenues that I necessarily can't. Because my biggest thing is, I can help somebody buy a house. I can help somebody sell a house. I can give them a ton of knowledge around a lot of other stuff. But those are the two main things, is I want to be able to help them buy and help them sell and do it very efficiently, and also do it at the best way to capitalize on their money, which is good to have a financial guy in your back pocket, because capital gains is something that everybody that's investing in real estate should be very heavily aware of, how it's going to affect you, and and what different strategies you can take to avoid it.
Correct. One of the things I get some kickback from, especially the investors in real estate, is they're like, well, we don't pay any taxes. Well, you don't until you do. And we've had a couple people this year, they didn't pay any taxes in 2021, but 2022, they were paying between $200,000 and $300,000.
Oh my gosh.
Because they didn't have a team or a tax professional that was able to look at their situation and say, hey, moving forward, here are some problems you're going to have.
So can we dive a little bit deeper? Like, what is something that, if you've got a real estate investor that's watching this, what is something that they don't account for when they're looking at that?
Depreciation recapture is a big one.
Okay.
So when they start selling properties, they've got to recapture that depreciation, and they don't realize that, or they don't realize how it's going to affect them.
Yeah.
And their tax professional either doesn't know anything about it or isn't paying attention, and then they get hit with that big bill.
Correct. And that's you see that a lot in businesses as well, when people are deducting, like, they buy these nice cars that they can deduct, and then they go and sell it. I had a tax professional. He's like, the worst thing that happens is they don't tell me they sold the car. And he's like, it never fails. I get 1 or 2 people that try to hide it and say, hey, I sold the car, but it goes through the state's records. Like, yeah. We know you sold the car with the amounts normally wrote on the back of the title. And now they're facing this. They're like, hey, why didn't we catch this? Well, I told you multiple times, like, hey, we deducted that. We gotta
put it back in.
Correct. And that's a big thing with accounting. And luckily, I had a finance degree, but most of my classes when I got my finance degree was in auditing. So keeping numbers straight and like, hey, if we can do this over here, how is it going to affect us on the back end? And staying very cognizant on that stuff is huge to me. It's like, hey, how is this going to affect me later? Because if I don't have a plan for it, then I'm going to be reacting the entire time when it comes back to bite me in the ass.
And one of the things I talk to my clients about is, out of the top 5 tax strategies, staying organized is one of them.
Yeah. What are the other 4?
One would be planning or not planning. So, going in and doing tax adjustments at the end of the year, or write-offs. Write-offs aren't tax strategies. They're just expenses for the year.
Correct.
So there's nothing long-term about them.
Okay. I'd like to dive a little bit deeper on that here in a second, but yeah.
Retirement strategies. So we've been taught to defer our taxes. But the number one complaint I get from retirees is they're actually in a higher tax bracket in retirement than what they were while they were working.
Correct, because they've deferred everything.
Correct. And inflation alone is going to keep you in the same or a higher tax bracket. And anytime there's an argument against that, my question is always, are you trying to become wealthy in your life? And for most people, the answer is yes. So if you're trying to become wealthy, that means you're going to be in a higher tax bracket in retirement.
Correct.
So what we try to work on is keeping as much money in tax-free vehicles as we can.
Okay.
And probably the last biggest mistake is going to be choosing the wrong tax professional.
I think that's huge. Yeah. I think a lot of stuff, there's opinions that come into it. I think it's a science, like how people manage the tax protocols and different stuff that goes into it, and staying up to date on that thing. It is hard for somebody to stay up to date on that stuff unless they have a team, they have people that are helping them along the way. And so many tax professionals out there, like I've seen it multiple times where people come in and they're like, frustrated because I just got hit with this $10,000 bill. And these are big things that happen. I mean, you just talked about some businesses that they're coming out with $200,000 tax bills. And it's like,
yeah,
there's a lot of people in this world that don't make $200,000 in 5 years.
Yep.
Like, and they're just getting slapped with it right now. That's huge. And being able to manage that, and that's when people are going to choose a different tax professional is when they get those big bills. So you might as well just do it up front. Like, make sure that you're taking care of your people up front so that you don't ever have that instance.
Correct. And working with newer businesses wasn't my intention, but I'm starting to work with newer businesses because of that reason, because it's just easier to set up everything from day one.
Correct.
Than come in 2 or 3 years later. And especially some of these businesses, I've got a client right now, I don't know, maybe 2 months ago he was at $60,000 for the year, but now he's at $130,000.
Yeah.
So
that's an awesome growth.
So his tax strategies have changed just in a matter of 6 or 8 weeks.
Correct. And that's the thing, is it does happen very quickly in real estate, and people don't understand how you have to manage that. Whether it's there's different avenues throughout real estate. You can have the rental, you can have the flipping, you can do investing, and you can also just buy and sell your own homes and different stuff like that, buy and hold. And there's so many different avenues, but the thing is, it changes very quickly. So if you're doing flips, then you may not make money for 2 months. And then all of a sudden you come across 2 or 3 deals and boom, 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 boom. Now you're looking at, I've got $200,000 that I just made. What am I rolling it into next?
And when we talk about different entities, so one of the things that I see all the time is they'll have the flip properties and the buy and hold in the same entity. So those are actually taxed different. And what happens is, let's just say you flip 1 or 2 properties. Maybe if you do that for a year, you're probably going to be okay. But if you do that maybe 2 years, or by the 3rd year, if you're flipping 1 or 2 properties a year, the IRS, if you get audited, they're going to come in and come in and tell you, hey, that's inventory, and you're going to get hit with ordinary income tax rate on those.
And now we've got an issue.
Correct. So
because they're not keeping anything separate.
So I always suggest if your flips in one entity and your buy and hold in a separate entity.
So when we talk an entity, just for people that are watching this and they're like, what do you mean? So you're talking to set up a different LLC,
business, correct?
Whatever they're doing, make sure that you're doing it in a separate legal name.
Correct.
Which is huge because people don't realize that. I know an investor and that has those things but doesn't use them. Keeps everything in personal name. And I caution them like, hey, let's fix this because we need to get this to where I don't want to see anybody's downfall either. And that's the biggest thing is bringing that wealth of knowledge to people and saying, hey, let's make this just a little bit better. Let's do this a little bit better because at the end of the day, we're all here trying to make money.
Yeah, and then what happens if they get audited and the IRS sees something that they don't like? They're going to go back. So if they find something in 3-5 years going back, then you're going to get hit with penalties, interest, back taxes, and then you're going to be on their list to audit again in the next couple of years.
Correct. And auditors are not fun to work with. I don't know if anybody watching this, if you've ever been through an audit process, it is one of those things where we were at an investment meeting and the guy was talking about it and he was saying, hey, if the auditors ever come in, and maybe it was you that brought it up, but if the auditors ever come in and you're super organized and super clean and everything looks clean, even if you're doing something wrong, maybe they don't catch it a lot of times.
They are more apt to take you serious and be like, okay, this guy's got his stuff together, and they're more apt to get out of your hair quicker.
Yeah. And I don't know, and now sometimes audits go clean, but I would caution anybody to bank on a clean audit no matter what you're doing. Because there's going to be something that is just random out here. So what you're trying to do is be as clean as possible. Because when you have that situation where they come in and they're, hey, we're looking at through this stuff. If they can see the top level, everything is clean, everything looks good. It's looking like, hey, this person's very organized. We're not going to find anything here. A lot of times they're not going to find anything, and they're going to say, hey, let's get the heck out of here. We've got other people to go work with. But if they come in and they see you're a mess, even if you're doing everything right and you're a mess, they're searching. Now they're like, okay, this guy, we're going to find something.
And then at that point, they can do as simple as, all right, you don't have the receipts, or maybe you do, but you just hand them a box of receipts. Well, they're not going to go through that. They're going to be like, okay, this was your income. You're not organized. We don't know what your expenses are, so now you're being taxed on all $200,000 or $300,000, and they're not going to spend any time to look at anything. They're just going to assess that tax.
Correct, and now you're fighting an uphill battle because now you're like, no, I have all this proof. I have this stuff. I have this, and you're sitting here spending countless hours trying to, and that's where people have to know what their worth is too, because time is money. And that's one thing that I value is time is money. So if you're willing to sit down for countless hours and go through that with an auditor, then fine. I don't want to do that. No. Not in any way, shape, or form. I don't want to do that.
So I always recommend getting a good bookkeeper.
Yeah. Yeah, and that's a huge thing. And if you go around very many people that do real estate investing, do have multiple businesses, they all have one.
Yeah, as business owners, we just typically fail at being organized.
Well, there's so much stuff going on.
Yeah.
I mean, and that's one thing that, like, we hit on it a little bit earlier is I was a little bit late today. And I called you and said, hey, I'm running about 10 minutes behind. I ran over on this other thing. I value everybody's time. If I am going to be sitting in front of somebody or I ask somebody to do something, I value their time. Now, the bad thing is in this business, sometimes we get carried away in conversations or something and time escapes us. It happens to everybody. But at that point, you have to have a value for other people's time and call them and say, hey, I am going to be about 5-10 minutes late. Is that still okay with you? Because if it's not, now that's my issue, and I've got to let them reschedule to whatever they need, that because I don't know what's going on.
Yeah.
And I find it, and we kind of talked about it, I find that too much people don't value other people's time.
I would agree with that.
And that's where I think you come in handy as well, is if you do this, if you find a good financial tax planner, they are going to value your time and later dates. Because if you don't prepare for the retirement, if you don't prepare for all of this stuff, you are going to be spending hours in an office trying to figure out how the hell you're going to pay your bills.
Yep. And one of the problems that I see with a lot of retirees is they've fallen victim to the traditional financial planning method, which is deferring all your taxes. Hey, inflation's going to be this. Average rate of return is important. Average rate of return does not mean anything when it comes to retirement planning. In taxes, right now we're in one of the lowest tax brackets in history, and we know it's going back up in 2026. But where's it going to go from there? Historically, we've been at 70-80% taxes. So we got problem with Medicare, we got problem with Social Security. They're both running out of money. So what's the only way to solve that problem? Print more money.
Which we've done.
Or increase taxes. Or just do away with them.
Correct. And that's the one that a lot of people don't see as an option.
I think you're going to hard pressed to have Congress vote for that.
Correct.
But they have no problem increasing taxes.
Correct.
And they've increased taxes on Social Security twice, and I wouldn't be a bit surprised if they increase taxes on it again. So for retirees, taxes are a huge issue, and a lot of them, they're not having that conversation.
Well, and the thing is, people are living longer.
Correct.
That's one huge thing. I mean, it's a huge talk. People are living longer. They're living in nursing homes longer. I mean, and there's just so much added expense that's coming out of those different programs. And that's why ages are getting pushed. I mean, retirement age is getting pushed back.
Like, that's another thing I look forward to happening is maybe they're going to push back the age on Social Security and Medicare.
Yeah.
Which that would be a huge problem, especially on the Medicare part, because most insurance companies aren't going to insure you if you're 65, 66. That's going to force people to stay at their employer longer.
Correct. And I see that all the time. Like, I used to have an employee that was literally staying with us just because to afford the health insurance.
Yep.
And we both knew, like, hey, you're closer to retire. Like, you need to get out of this door and enjoy your life. And that's one thing that I think people should really focus on is you can spend all your life working. And that's awesome. It works for some people. But at some point, you should be able to step away from that and be perfectly fine. And that's just something that people don't think about every single day. And especially your more blue-collar workers, they're sitting here, they're working themselves to death, and they don't think about, hey, what am I going to feel like doing this same job when I'm 60, when I'm 65?
Yep.
Heck, when I'm 70 because I can't afford my health insurance and I can't afford these different things. Like, I'm still here. Or here's something that I think is huge too, is I used to see situations where there's an age gap in marital status. Mm-hmm. So the husband's 10, 15 years older, and the wife has some medical issues, or the roles switched. Because I see in the situation that I was in, the role was switched. So the female was a little bit older. She was about 10, 15 years older. And the husband had some medical issues, couldn't qualify for health insurance on his own. So she had to keep working to get his insurance. And she was working well past the retirement age and when she should have been there.
That's actually the exact position that my dad's in right now. Is his wife has medical issues. He's ready to retire, but because of health insurance, he's basically forced
To stay.
to stay.
That's a tough situation. It causes a lot of animosity. It causes a lot of stuff. There's a lot of stuff going on, and it's not something that people should have to worry about, but it is the reality. And that's the bad thing is reality. Sometimes it sucks.
Yeah, he's ready to jet.
I don't blame him, man.
I may be forced to. He'll probably come on with me in the next year or two, so I may be forced to take care of that.
Which
Which
is kind of awesome that you're in a position that you're able to do that, and I really pride that. Like that is huge, but not everybody's in that position, and that's and it's just one of those things where a few steps can make those things a little bit different. Now, health issues are health issues, and you're trying to find those things and make sure that you're taking care of people. But having good plans in place can help prevent some of those things.
Correct.
Talking about those things earlier on than when you're older is it helps you be able to gain that because people don't realize the amount of money they lose by not preparing for retirement earlier. Like if you wait from age 20 to age 30, you lose millions of dollars in not preparing for stuff.
Correct.
And that's one thing when I used to do life insurance is people would always say, well, I'm in my 20s. I'm like, yeah, but we can use this as a vehicle. Like you were talking about, we can use this as a vehicle to make you wealthy.
Correct. So we use life insurance for LIRPs, life insurance retirement plans. Life insurance can also be used to pay for long-term care.
Which is huge.
Most people don't know that. Most advisors don't even talk to their clients about long-term care. But essentially, different companies have different rules, but essentially they give you an advance on the death benefit, and you go use that for long-term care. And that's not just living in a facility. That can also be just helping you with your daily activities, maybe grocery shopping, maybe using the bathroom, maybe taking care of pets.
Correct. And that's something that I encourage anybody that is concerned about long-term care to look into because I've found, because I used to be able to offer both long-term care and it through the riders to a life insurance policy where it's that accelerated death benefit. And an actual long-term care policy is harder to get a payout of than the accelerated death programs are.
They're super expensive. They're cutting back what they cover.
Correct.
And then also, because most people wait, they don't qualify.
Yeah.
Because the qualification for long-term care is more based off of your health, whereas for life insurance, more based off of your expected date of death.
Correct. And people don't start preparing for that stuff. And I know that was one of the hardest, those are some of the hardest conversations to have around long-term care. And that's why a lot of companies, like the companies that were big players in the long-term care, some of them don't even offer it anymore.
Nope.
Because it is such a costly program because, well, I don't even remember the statistics, but it was like it's borderline almost 100% of people that are doing or have a long-term care policy are going to use a payout at some point in time.
So the expected use of, or the expected percentage of people who are going to need long-term care is upwards of 50 to 60%. And that's increasing because we're seeing more health problems across the board. More
health problems. People are living longer. They have to have some help with that.
So who's going to take care of that? A lot of them have to move in with their kids.
Correct.
And actually, my dad and I took care of my grandparents, and I don't wish that upon anybody.
No.
That was watching your grandparents go from here to straight down.
And you get to see them at their worst. And here's the other thing, is the financial burden that it puts on the person that has to do it.
They had a decent amount of money, so the financial wasn't the biggest deal for us. The mental side of it.
Correct. Which is a huge thing as well.
But we were also lucky in the respect that my grandparents saved and saved and saved forever.
Yeah.
They were savers.
And that's an awesome situation as well. But it's not though. Like that's the thing is when we're having these conversations, you can do everything that you want to make it better or different situations, and you can save all this money and do these things. When those tough times come, it is hard regardless. That's why I always told people if you have a situation where you have a death in the family or you have this disability that is now taking it out, what I am trying to do through these things, or what you're trying to do with your financial planning and helping them get there and doing these long-term care products, is exactly what you just said. Is luckily they had saved all this stuff. So yes, the mental part of it sucked, but the financials were okay. That's the situation because nobody can fix that mental.
No.
Like there's nothing out there that is going to, people that lose children, people that lose parents, lose grandparents, nothing is going to fix that. There's nothing out there that's going to prepare you for that. It's not going to happen. But the financial side of it, that's the stuff that tears people apart. That one of the biggest causes of marriage was
finances.
Correct. Finances and a death of a child. Why? Because the thing that I seen was if I always used to talk to people about, you got to insure children because what happens when something happens? And they were like, well, I don't want to think about that. You don't, but here's the thing. If something did happen and I gave you $25,000, $50,000 there's going to be a few things that happen. Now, you're paying for a funeral and it's not coming out of your bank account. 2, you're taking some time off work because
Correct.
you need it. You need it. You're taking some time off work to cope. Because what I see is one spouse goes back to work, the other one can't do it. Then they can't agree at that point in time, and now they're splitting and going different ways because this one's coping different than this one, and they just can't figure out how to manage it. And I'm not saying it's going to help in it. It's not going to take away that mental side, but it does help alleviate that financial side. It's huge.
Yeah, that's something that's not talked about enough when it comes to planning is the kids' insurance. And like you said, it's tearing apart the parents. And, of course, as a parent, I would never get over that. But not having that extra stress is going to be helpful.
Yeah. And it's not anything that you're ever going to forget, but it's going to be something that, you just have. It's here. We're all about just alleviating a little bit of the stress.
And you touched on taking time. There's no way in hell I could lose my child and then go back to work the next day.
No,
I'd probably take 6 months off.
But people are forced to.
Correct.
I mean, and 6 months may be the right time for you. A year, 2 months, 1 month. But the bad thing is people are forced into situations where, we gave you 3 days for bereavement. Oh, do you know what just happened the last 3 days? Because that was awful.
I didn't get out of bed.
Correct. And now you want me to come in here with you and talk to you about this thing? It is tough. And I've seen it. When I was with the major company that I was with, we'd go to a life convention every single year. And they would put up the amount of money that they had paid out in child policies every year. And it was millions. And it's like, and we know what the limits are on how much you can insure a child's life at. Like, they had different limits on how much you could do it based on. And so you knew, and then they'd show all the policies that had paid out, and you're just looking through this list, and it's $25,000 here, $50,000 here, $25,000. When you're talking about multi-million dollars, it takes a lot of those to equal that. Mm-hmm. It's a harsh reality.
And then we got the issue with cancer. Now cancer rates upwards of, I think last time I looked, it's above 50% for people in general. but kids, it's becoming a bigger and bigger issue.
Yeah. Man, there's so many things going on in this world right now, and we kind of got a little bit off because anytime we get into talking about life insurance and that type of stuff, I am extremely passionate about it. I don't sell it anymore and or anything because I fully help people on the real estate side. But anytime I get the opportunity to talk to somebody about it, I am extremely passionate about it, and I'm extremely passionate about making sure that people are aware there are things out there that you need to do to prepare for those moments, even though they're going to suck regardless.
Yep.
But so let's talk a little bit, and we'll transition a little bit out of that. Let's talk a little bit about your book. What's your book called that you just released?
Building Wealth Through the Tax Code. So basically what I did was I've worked in the tax industry a couple years, and I just see the same problems occurring over and over and over. Some of it is tax professionals just flat out don't know how to prepare taxes. Some of it's entity structure. Some of it's wrong entity structures. Some of it's just not doing any tax planning. Some of it's myths. Like one of the myths that I briefly talk about in there is you're going to be in a higher tax bracket in retirement. Well, that's probably not going to be true. So I just decided to write about a lot of that stuff. I used a couple other books as references, as sources, and even as a tax professional, I wouldn't say it was difficult for me to go through those, but it was very daunting. So what I tried to do is simplify a lot of it, use less of the tax jargon, try to use some more pictures, try to use some more bullet points. Mm-hmm. I have severe ADD, so bullet points really helped me focus. So my thought process was maybe this will help other people get through this easier, because I know taxes isn't the most fun thing to talk about.
Yeah, and it's not the most fun thing to
read.
It's not. Most people, I see one of the biggest issues that I believe comes with taxes is avoidance. Mm-hmm. I'm not a tax professional. I'm not giving you tax advice, but I do think that one of the biggest issues that everybody has, that it has a business that struggles with taxes, is avoidance, because they do not want to talk about it until that one specific time in the year.
And what I did in it, the back half of it is just tax strategy after tax strategy.
Yeah, which is huge. People need to pick that up. So here's my next question. How do they get it?
All you got to do is text 785-699-7686. It's going to prompt you to put in your information, your email. It's going to download it onto your phone. It's going to send you an email. That way you can download the PDF onto your computer, and it's going to give you a link for a flip book.
Which is pretty cool.
I thought the flip book was easier to read than the PDF.
Yeah, it's super easy to read, because you had sent it over to me there last week so I could check it out a little bit, and it is super easy to read. So here's the big thing. They're texting, and they're able to download that. So this is free.
Yep.
It's free knowledge. Everybody, so you have no excuses of not to go grab this thing and read it when you can, because it is going to help you, and this is free knowledge that now you can just flip to the back of it and get the tax strategies and use them.
Yep.
And implement some of that stuff to help you start saving money, saving taxes, building wealth. That is huge. I think that is very huge, and I think that's very honorable for what you're doing and giving this knowledge to people and putting it out there to help them in their situations.
And the goal is I just want people to understand, hey, there are opportunities out there that they're not being told about.
Yeah, I think that's huge. I am trying to do the same thing with these podcasts, is getting as many people in front of people looking to move to the Kansas City area, or people that are business owners in the Kansas City area, people that are selling houses in the Kansas City area, people that are doing things in the Kansas City area. I'm trying to help you with these interviews because I want you to have a plethora of people that you can go to in any situation, and they can help you. And that's exactly what you're doing with your book and getting it out there and getting this knowledge out there for free, is people can go to that and they get a plethora of tax strategies that are able to help them next year.
Yeah, we just can't make good financial decisions if we don't know what's available. So most of our financial information comes from the banks, Wall Street, and the government. Do you think they're really telling us the truth on everything?
Well, they're trying to tell you how they're going to make money.
So they actually make more money off of your retirement plans than what you'll ever make. But so I want people to just have an understanding that there's more out there and that maybe they're not being told everything.
I think that's huge. So let's talk. Somebody's looking for a new financial advisor. They need somebody to help them with these tax strategies. How do they get a hold of Andrew Keene?
Text that number, 785-699-7686. Download that book, read it, and then I will contact you, or my cell phone number is 785-430-3717.
And that's huge. Call him. Get set up, get you a meeting scheduled so that you can start to figure out how you are going to become wealthy.
Quit giving the government your money.
That's huge, and we're gonna wrap up on that. I really appreciate you coming out and talking to me. I'm gonna have you back in here because I know you got another book that you're gonna be pushing out soon. So we are going to get you back in here to talk a little bit more about this stuff, because I think it's huge. I think it's so much information that people need. But if this is your first time on the channel and that you like this video, make sure you hit that like button. Also hit that subscribe button, and then hit that little bell so you'll get future notifications. You'll get a notification when this guy comes back so that you can get more information, find out what that next book is so you can grab it. And I really appreciate everybody watching this, and I appreciate you coming out. Thanks, man.
I appreciate you having me.
Thanks, man.